Shana Sissel of Banríon Capital Management joins us to discuss what she's hearing from clients about the alts. What do they want, especially after these redemption headlines for the BDCs? This is Bloomberg Open Interest.
Let's get more on alternative investments with Shana Sissel, Banríon Capital Management founder and CEO. Shana, Armin went on to say to Matt and myself that there has been excessive risk-taking. It wasn't just in 21 and 22, but with all the retail funds coming in, that people had to put that money to work, and that's just working its way through the system right now. What do you view as happening in this moment of private credit right now when we're looking at redemption requests as high as 41% in the case of one of those Blue Owl funds we learned of this morning?
So in March of 2025, I sat in Miami Beach on stage at the Future Proof Citywide event there, and I spoke exactly about this. The topic was public and private markets meet, and a lot of the conversation was revolving around private credit availability at the time. There was a lot of push into interval funds. There were ETFs coming to market that had private credit in the name. And I warned that when it comes to these types of vehicles, that structure matters. And that as financial advisors, because that was primarily the audience that I was speaking to, it was a responsibility of both the issuers and the advisors to look at the structure of the vehicles that these products were being offered in and think thoughtfully about whether or not those structures matched the underlying liquidity of the investments they were making. And I talked about that at length, evergreen, having to put money to work, so on and so forth. And as you can see, that was an important conversation to be having, and it was an important consideration to be making. And BDCs are not a new vehicle. The vehicles I was speaking to were things like the ETFs that were coming out in the interval funds, as well as private LP-oriented vehicles that were evergreen in structure, but not necessarily in liquidity per se. So you couldn't just go and get your money out. Either way, it was a change from how private credit was originally packaged in the market. So it's not surprising to me that this is happening, but that doesn't necessarily mean that there's pervasive systemic problems in private credit. And I think that's where there's a lot of debate right now. Private credit is
Are there pervasive systemic problems, do you think, Shana?
I don't think so. I think that there's two parts to private credit. And the vast majority of private credit is done in what we call lower middle market. These are small loans. You know, the definition of lower middle market depends on who you ask, but it can be anywhere from loans between $1 million to say $10 to $15 million. The vast majority of the stress in the system are in loans that are $100 million or more. And there's only like 10, 12 issuers that play in that market. It just happens to be the biggest ones that everybody's heard of. But it's also the smallest market for deal flow because the number of companies looking to do deals in the $100 million range is infinitely small. And so when something goes wrong there, it's felt across that part of the market. But the lower middle market is attractive, and that is one of the things that I think is being ignored in all of the debate that's going on right now as it pertains to private credit.
So, Shana, can I just ask, what are you hearing from clients and what are you recommending to them right now in this moment?
So that gets exactly to what I'm hearing. Financial advisors and their clients in the retail space are now scared of private credit. They don't want to talk about it. They don't want to look at it. They don't want to consider it, which is unfortunate because the lower middle market is important. And I want to stress this. The lower middle market of private credit is extremely exposed to small business in the United States. The vast majority of small businesses, which is 70 to 75% of all business in the United States, can only access capital in that space. If there is an issue with people wanting to invest in it, that suddenly dries up available capital to small business. Just think about what that could have consequences on the economy. I'm not saying there's a systemic problem in private credit, but I am saying that there's parts of private credit that could be collateral damage and affect the economy as a result. So think about that, and that's actually places people should be considering investing.
Shana, great to get some time with you talking about alts. Shana Sissel there of Banríon Capital Management.